Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi and Nikunj Dalmia. And for now, the market continues to be in a narrow band. In fact, Nifty has just managed to move in a 100-point range today, just between that 4,550 to 24,650 thereabouts. That's been the range today. Having said that, it's the small caps which are outperforming today. There's a rally of almost 1.5% when it comes to the small cap index. Mid cap is actually flat, but it's the mid cap space which is firing away. PSU banking index has gained today. Remember, it's one of the worst performer if you look at the month to date performance, and for the last 3 to 4 months it has been underperforming the index, but for the day today it's managed to perk up. Remember, the finance minister did meet with some of the public sector banks today. Maybe street is expecting something positive, so that space is active. Autos, they are in the reverse gear. There were a couple of downgrades this morning. JP Morgan has downgraded the auto sector, and then I think Bank of America too managed to downgrade it. So a couple of these, Citi actually downgraded that sector. So some of these auto companies are on the back foot. Platform companies, they are quite abuzz. Matrimony, for instance, is up 20% in a trading session. You have Unicommerce, which is the latest listing, not really a platform company but still a new age tech at that. And then Ola Electric is up another 10% today. From its listing day, it's had a solid run. IFL has a different view of sorts today, and we'll delve deeper into that. But definitely all of these so-called new age companies or new IPOs, etc., are gaining traction as we speak. So lots to talk about.
Oh yeah, absolutely. Quite a bit of buzzers in there. Piramal Enterprises, like Anisha just flagged off. Hindalco is gaining ground by a good 3.5%. Birla Soft has been a buzzer from the word go today. And then Voltas, which has scaled up quite nicely. It's a good 4% notch up that stock is seeing. So let's nail it down to a couple of ideas and dissect the market construct. While for the Nifty, we've clearly given up the morning gains and we've been largely flat for the better part of today's trading session, but still going good. I mean, at 24,600 thereabouts, I don't think the index level really gives you any reason to complain. But let's find out what the construct is looking like. Naresh is with us. Naresh, hi, afternoon. How are you mapping the moves on the Nifty, turning out to be quite the consolidation Monday so far?
So on the index, we continue to consolidate. One of the reasons being Bank Nifty continues to be sluggish, not able to sustain momentum as such. We've made a base on both the indices as such, but till the time we don't see Bank Nifty making a move, we get into a consolidation phase only on the benchmark indices. But overall breadth is good. The mid cap and the small cap indices are doing decent. And the recovery is smart across the broader market. So for now, we are still in this band wherein once we cross 24,750, that is where we may get into momentum on the index as well. But stock specific action continues to remain positive, with IT names doing well, oil and gas doing okay, small cap pharma, large cap pharma doing well. So we are seeing selective moves across the broader market as such.
Okay, that's the move across the broader markets. Let me also welcome on board Andrew Holland as well and figure out what he's making of the market right now. Andrew, hi, afternoon. Rudra, I'm just going to come to you in a second. How is it that you're mapping the market mood right now? I mean, there is data to prove that mutual funds have actually upped their cash allocations or cash balances, but that doesn't seem to be reflecting anywhere in the markets.
Yeah, no, it's a big week this week, isn't it? With the Jackson Hole meeting and the Federal Reserve Chairman talking there. So I think the market's going to look for two things. One, obviously, that it's a go for an interest rate cut, and then they're going to work out whether it's 25 or 50 basis points. I think it's going to be 25 because the data we've seen recently has been for a robust economy. So still, I think that they'll edge on the cautious side, but I think he'll have to kind of indicate that 50 basis points or more might be forthcoming if data does show to be weakening into the back end of the year. So that will keep the market comfortable. And then, of course, here for our markets, we could probably kind of speculate that maybe the RBI would look at October for some kind of easing here. Which would have a positive impact, I think, for the banking sector. And as the commentator said before, it's really the banks which have not performed, which is not getting the index moving higher. So if the bank moves, I think we could see new highs for the markets along with interest rate reductions or hints at the interest rate reductions by the Federal Reserve later this week.
Andrew, if one looks at the last 10 days of trading, the volatility I think is the big story. It went up from 24 to 55, 60, has come back to 14. Why we have seen such a big change from risk on to risk off and risk off to risk on again?
It's a great question, Nikunj, in terms of, we went from, a soft landing Goldilocks scenario to your recession, emergency rate cuts by the Fed, problems with the carry trade. If you would have been away for a week and came back to the market last Monday, you would have said, what's new? What's changed? So I think it's just a little bit of, I don't know whether it's because, people were just trying to unwind some of their, larger holdings because of the yen. It's difficult to say, but, I think at that time, there was no need to go from, soft landing to hard landing so quickly. So I think the market just came back to its senses in saying that, listen, there's nothing wrong with the economy. But, the next phase is what is the Fed going to do? Because those worries will linger there. So we have to see at least a 25 basis rate cut in September, if not more, but with the hints that there's going to be more throughout the year. So the market doesn't get worried about this possible, kind of recession, which, again, if you look over the last few weeks, that the odds by some of the brokers have gone from 40 to 50% down back to 15. So I think some of these are exaggerated by some of the commentators as well.
We are flat in last 1 month. We may be 500-600 points away from an all-time high, but that frankly is not very important in the overall scheme of things. The fact that Dow is now couple of 100 points away from an all-time high, which actually is above 40,000. So Naresh, are we on course to make a new high soon for benchmark indices?
So the way global structure is, it looks like we are set for a new all-time high slowly and steadily. Till the time we don't break 24,200, the assumption is trend is still on. If you look at what has happened in US markets, full recovery. If you see, say, Asian indices, almost a full recovery. You have Brazil, which has made a new 52-week high. So the case out here is we did not fall as much like the others. So we are taking a little more time, but the structure is positive. And the problem remains on the banking side of it. We are always 30% plus on the indexes, banking and financials. And that as a sector is not pulling up really well. So even if you look at right now, the bank Nifty is at an equivalent of say 23,500 odd levels to the Nifty in terms of performance. So once we get banks performing, we may get a much easier move. If you look at IT names are almost going back to 2021 highs. So even the name sector, which was doing bad for the last 2.5 years, has pulled up again. So it's all about banking names out here, but the structure is positive for a new all-time high as such.
It's positive for a new all-time high, but also wanted to put the spotlight on some of the news makers. Take a look at Kaplan Point. That stock is up 13%. The news flow is that the injectables plant in Tamil Nadu has received 0 observations from one of the regulators, and that news flow will come up for you shortly on the screen. Glenmark Pharma is up 4.5%. Motilal Oswal has actually upgraded the stock to a buy from a neutral. Target price has been hiked all the way to 1850 versus 1200 bucks. And Voltas is up 4%, one of your top gainers from the F&O universe. Jefferies and Nomura has actually raised the target price after the con call that happened on Friday. Jefferies has increased the target price to 1770 versus 1270, and Nomura's now stands at 1857. So some of these names definitely deserve mention. But as we were talking about, it's about the new age tech companies which have been actually doing quite well, whether it's Ola, which has actually managed to almost double from its IPO price, whether it's Zomato, PB Fintech, etc. My colleague Sharad has actually done some analysis around how the new age tech companies have been performing, what has been the real tailwinds behind all of these. Let's take it across to Sharad to get a sense as to how the overall price discovery has been for some of these new age tech companies.
Well, yes, from 2024 lows, if we still look at it, Zomato has doubled up, almost 116% up, and also PB Fintech, that's also doubled up. Now, these new age tech stocks have been rallying, and if you look at Paytm, Cartred, Nykaa, they have also been going up, ranging between 33 to 70%. Now, what are the key reasons for the new age tech stocks actually gaining traction? First one being is importantly a sectoral churn. We have seen PSUs lately coming off from their 1 month high levels. There is a clarity on the path to profitability, and the companies have started explaining these things in their quarterly earnings. The focus is coming much more on the core business rather than the non-core business, and of course a strong cash balance. That is also something which analysts are bullish on when it comes to the new age tech stocks. Now, recent listings in 2024, the numbers right from their IPO price, they have been very rock solid. Of course, Unicommerce, that has doubled up 104%. Ola Electric is also nearing its doubling its number, almost 91% up from its IPO price. Ixigo, Honasa, GoDigit, all these companies in the new age segment were listed this year itself, and they have given handsome returns to the shareholders. Now, let's look at the key commentaries, what is there actually in store for the new age tech stocks. The larger names, Zomato, strong growth is coming in the Q-commerce segment. In the Blinkit, especially Paytm, focusing on insurance in the mutual fund distribution. While if you look at PB Fintech, they are expected to be beneficiaries of GST rate rationalization, and also certain price hikes would be coming in. Nykaa, strong BPC, which is the beauty personal care segment, and also festive season is expected to kick in. So that is where the analysts are very bullish on. And for car trade, that has turned profitable over the last 2 quarters. Interestingly, we look at the key shareholdings also of the new age tech companies. Interesting names, interesting positions going up. Zomato, Nippon Mutual Fund and ICICI Pru Mutual Fund raised their positions. Paytm ace investor Akash Bansali has 1.2% stake in the company. While for PB Fintech, if you look at it, Franklin Mutual Fund and Axis Mutual Fund did raise their positions. Nykaa are having significant larger family offices from Hero Group and erstwhile promoters of Ambuja Cement. While for car trade, we have Zerodha holding almost 1.1% stake, 7% stake in their company. Now, also look at the target prices. How's the setup coming in? Of course, there's a strong run-up. So that is what we have actually factored in. But still, there are certain companies where 10 to 20% of 12-month return potential is still there.
There are some thoughts on Pankaj Murarka. How should one really approach some of these new tech and consumer tech companies from here?
In case of Zomato, there is a clear case that Blinkit has established a clear-cut edge in terms of over competition in the quick delivery space. And obviously, India being a very large market where grocery and retail sales are about $800 billion, we can easily accommodate 4 to 5 players. So not everyone is going to win that battle, but Blinkit clearly seems to be one of those which is going to win that battle. Now, if you put that in context and of Blinkit being a leader in the quick commerce and in the grocery segment, then I think the potential value of that business 10 years out can be significantly higher, meaning it could be equivalent of what a DMart or Reliance Retail is, or probably will be going forward as well. Because the consumers are pivoting from going to malls to having this luxury of the goods being delivered to them at their home in 20 minutes or 30 minutes. So I think the growth potential is still very, very significant in that sense. And I still think that, there is a long runway for growth for all these businesses. When you talk about Zomato's food delivery business, mind you, their total customer base is just about 4% of India's population. Why can't about 15-20% of India's population be Zomato's customer base? Meaning, possibly over the next 10 years, I think that could be a probability in that sense. And in which case, probably the growth curve for them can be very long.
Okay, on that note, we're going to take a very quick break, but come right back. We'll continue discussing some of those new age stocks with our experts as well.
Welcome back. Well, we were discussing some of these new age companies, and one of the recent listings of just last week or a couple of weeks ago was Ola Electric. A whopping 92% sprint upwards since this listing is what we have seen already, and that's the move on Ola Electric counter. What's aiding the up move, and what's a differentiated view coming in from IIFL, because they are talking about what the street is already building in, and they are raising a bit of a red flag as to what are the factors you need to be conscious and cautious of if you're investing at the current level. Shrishti has been parsing through that note for us. She's joining us with the latest on that. Shrishti, take it away.
Well, certainly, what a surprising move on Ola Electric, riding fast after the IPO, because it was a subdued earnings, but within 7 trading sessions, we have seen the stock is almost double now, a 92% 2% move. And look at the run up in the valuations, because we do note that the company is still a loss making on the bottom line. But apart from that, if we look at the current EV by sales metric, then Ola Electric interestingly is trading at an expensive valuation from the global giant Tesla as well, because Ola Electric now current EV by sales valuation now stacks up to 8.5% after we look at the 10% upper circuit where the stock is locked currently. Now if we look at some of the factors that could be at play and what the street could already be penciling in, and that's the highlights coming in from IFL Note, where they say that FY30 scenarios are something that the market are already, and even the participants are already factoring in. First up, they do say that the two-wheeler industry electrification of 30% is what the experts or investors are must be actually factoring in, versus 6% currently. The Ola's market share of 40% is similar to current, that within the next so many years the valuations or the market share will be right there. The EBITDA margin of 15% could be similar to the ICE two-wheelers. But on the flip side, they also highlight some of the bumps that could be on this particular ride, because for the two-wheeler industry, given the run-up in some of these legacy players which have majority of their manufacturing in the ICE segment, we have seen some of the re-rating that's happening. So that's the scenario too, that within the next so many years, or maybe in the 5 to 6 years, will the valuation metrics be there for Ola Electric, or the kind of re-rating that we have already seen in these ICE players will continue? So that's the question that IFL is raising at this point in time. But nevertheless, it's been a surprising move on Ola Electric.
Andrew, I speak Ola and I just want to put finger on my lips. At 75, 76 when it went public, it barely just scraped through. It was difficult. Last day, some HNI participation, some institutional participation in the issue barely got subscribed. It listed flat. In fact, was lower than the issue price. And half an hour after the listing, we've seen a wave of buying, so much so that the stock from the issue price of 75, 76 has now gone to 146. What did everybody miss on, and what did everybody realize after listing? It's like Jack and the big stocks, right? Overnight, something has changed.
Yeah, Nikunj, I don't know what's changed. I mean, I'm scratching my head in terms of, what, I mean, you could say it was underpriced, but I don't think so. So I'm really not sure what's driven this, the share price so high, to be honest. And I don't know what's changed, what could have changed since the listing. And prior to the listing, that would have this. See, I could only think of two things. I mean, if you remember, we talked about this over a year ago when there's a lot of kind of question marks over the Zomatos and Nikas and everyone else in terms of when were they going to turn profitable. And that was the key, for those stocks. As soon as you started to move, cash flow positive and then, kind of getting profitability as well, that was a move for the share price. So unless there's something I've missed with Ola in terms of profitability, or then that's the only real reason I could think of, Nikunj, at this point. But that wasn't what most brokers were forecasting, initially when it was listed.
Pharma is looking strong, and some of the pharma stocks are actually cutting out. Aurobindo Pharma, Dr. Reddy, Cipla is having a good session, so to speak. DV's after a little bit of here and there, it's at 4,600 now. Rudamurthy, anything in pharma space which looks interesting?
Among all the pharma stock will be Dr. Reddy, and it is just consolidating now, and risk reward at current market price is really good to buy. So might be at levels closer to the 6,800. I will be a buyer in Dr. Reddy. Even at current market price, you can buy and add on dips. Keep a stop loss of around 6,750 and look at targets of 7,500 to come on Dr. Reddy. And for me, if someone has a longer horizon and you want to add to your portfolio, yes, Biocon is one stock which you can buy at current market price. I will keep a stop loss of around 325 on Biocon, looking at targets of around 420 to come. So positionally, Biocon is a good buy if you have a longer time frame, and Dr. Reddy also looks very strong. These are two stocks looking very strong on chart from the pharma pack.
That's the take coming in on pharma. In the meantime, you've got a Hindalco holding up well. There's Shriram looking good. 1059 is where this stock is. Tata Steel has not been bad. ONGC, after all those upgrades that trickled in on this stock last week, that continues to hold up another 1.6%. And of course, since we were on the subject of Glenmark Pharma, there is that Motilal Oswal upgrade coming in on Glenmark, wherein they've upgraded the stock to now a buy from the earlier neutral, up the target price also all the way to 1850. So that's another stock which has been holding out very well. Voltas, that's the other big buzzer in trade. There's a buy from both Jefferies as well as Nomura on both these stocks. If we can just bring up those graphics up for you. And they've upped the earlier price targets as well, wherein for Jefferies, the earlier target on Voltas was 1270. Now it's upped all the way to 1770. And for Nomura as well, it's up all the way to 1857 right now. Andrew, how much of the cap goods story you think still has further headroom to go?
So I think I still think there's a lot more to go for capital goods. I think the ordering by the government is still yet to kind of take place. So I think what boosts share prices in this sector is really orders. So once we start to see more orders coming through, I think you'll see the next move in the share prices. The problem is that execution is never quite as good as the order books. So as long as the orders keep flowing, the share prices will do well. But execution will be something which we'll have to continue to watch, because that's what differentiates the good players from the poor execution. So I like the sector, but again, it's one where you have to wait for those orders to come through to get to get the share price moving again. But I think that's going to start coming from September is what I'm hearing. So that could be a catalyst for the sector. But generally, overall, the market has, the earnings season hasn't been great. There's been pockets of surprises on the positive side, but otherwise, no real catalyst for the markets to move higher. And that's why I mentioned before, it's really about interest rates now and the banking sector, moving the markets to new highs.
Interesting stock which has completely turned today. Naresh, this has been an outlier. Otherwise, V-Guard Industries. It's trending lower on strong volumes. Another one which is an outperforming stock has trended lower today is Hindustan Zinc. And then there is Prudent Corporate Advisory, which is a liquid. But V-Guard, Naresh, it's a fairly popular and a liquid stock.
So the stock has been moving up for the last almost 4 or 5 months. The previous all-time highs for the stock were around this 300, 350 mark. And that is where it broke out from. So in the last few sessions also, if you look at it, say in the last 4 or 5 sessions, the stock went from 470 to 570 and now has taken a pause. So it looks like a short-term top is in place and it could start consolidating. Hindustan Zinc is OFS, so that's seeing that sort of a gap down on that basis. Prudent also has been in a one-way move in the last, say, 6 months. The stock has gone up from 1200, 1300 to 2700. So a pause would be pretty normal here.
Coming in on V-Guard today, just looking at IIFL Finance, because that stock has actually managed to perk up. And then, of course, the mid-cap and the small-cap IT universe and e-clerks, First Source, for instance. In fact, First Source has been having a great run of late. Birla Soft, all of these stocks are doing quite well. See, Rudramurthy, what within these mid-cap IT names would you recommend a buy? Even Tata Elxsi in the last 2 minutes has perked up.
Yeah, see, for me, First Source definitely is a stock which looks strong, and Midcap IT can continue its outperformance. However, the move has been very swift in last 4 or 5 trading sessions in First Source. So any dips to levels closer to around 310 would be a good entry point. Even at current market price, one can enter into First Source and buy it on dips to 310. And I look at 400 as a target initially on First Source, and it can further move up from there. And when I look at chart patterns of even Tata Elxsi, yes, this stock having made a big move towards that levels of 8,000, 9,000, and then having consolidated now is just giving that signals of breakout. Today, for the first day after a long consolidation, it is just breaking out of a short-term consolidation, which is at around 6,900. So closing above 6,900 is indicating to me that yes, this stock can move up for very short term to levels closer to 7,350. So with a stop loss of 6,900, I will buy Tata Elxsi for target of 7,350. So I buy on First Source as well as Tata Elxsi.
Okay, that's a buy coming in on both First Source as well as Tata Elxsi. In the meantime, it's also important to highlight some of the auto downgrades as well, which are trickling in, right? Both from JP Morgan as well as Citi, which has downgraded the entire sector now to neutral from the earlier overweight stance that they had. And Nikunj, I think we were the first to actually catch in on this trend. Ever since all those discounts were doled out from most of the auto majors.
Yeah, now A, there is availability, and B, now there is perhaps a big change in terms of where the car demand is moving. From being a seller market, which is their car company were demanding the price, they were commanding the delivery, and they were making you wait when it comes to the physical, delivery as well. Now, what we understand is that you actually have virtually for most of the popular models, the waiting period is out. B, you can negotiate on the table, which is that if you are able to get a better home car loan deal, or perhaps the vendor can throw in some sweeteners in form of accessories, or maybe get a upfront cash discount, that is at play. And see, the base effect has now kicked in, as most of the auto companies post-COVID, they've expanded their capacity. There was a time when we saw a huge huge uptick which came in Mahindra and Mahindra largely because of the dominance in SUV market. But guess what? Now everybody wants to be in that SUV market, starting from Kia to Maruti to Mahindra and Mahindra, even Hyundai, Maruti, Tata, everybody wants to be there. Similarly, in the EV market, Tatas have dominated that space, but now again competition seems to be intensifying. So for the auto space per se, I think now you may say that there is going to be perhaps more news which could disappoint rather than more news which could surprise. FMCG on the other hand, completely different kettle of fish. News is getting better. Volume growth is coming back. Inflation and base effect has kicked in, and we could be at the turn of a cycle where news is going to be more positive rather than negative. Andrew, for autos per se, do you think that bull run is over now? Purely looking at on-ground reality, or the channel checks are indicating that waiting which you had to do when you bought your Mercedes is over now.
Yeah, I mean, in terms of that, Nikunj, I think you're right. In that, the demand is still robust, but obviously suppliers come on, so you get better bargains. But I think that also could lead to better volumes as well. So as long as commodity prices don't rise so quickly, which they haven't been doing, I still think that these, the auto companies will show healthy growth in terms of both top line and margins as well. So a little less worried about that. But what it would say to me is that obviously production has picked up to meet demand. So that's a good news. So I don't know about you, but if someone tells me I have to wait a year and a half for a car, then I probably go and shop somewhere else, right, for something. So if I can get the model I want, with a few extras thrown in, great news. So I'm less worried about that kind of that situation going forward. I think it's good for the volumes of the industry, so I'm less worried.
Sense. Andrew, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thank you.
Okay, we'll take a very quick break. Still pretty quiet on the indexes, haven't moved at all. 24,600 staying put for now. We'll take a break, come right back. We'll continue tracking markets on the other side. Back with closing trades right here on ET now. The Reserve Bank of India has tightened norms on peer-to-peer lending for NBFCs in a bid to improve transparency as well as compliance. In fact, we are picking up from our sources that some lenders have actually halted withdrawal and investments under the purview of the new guidelines. In fact, let me take it across to Anurag Shah, my colleague, and figure out more on what he's picking up from his sources. Anurag?
The RBI guidelines, some lenders has stopped the early withdrawal and the investment because the lenders, the cash crunch will happen after the implementation of new guidelines. And as per our sources, we have spoken to a few P2P lenders also. They are in discussion with the RBI also. They are seeking more clarity because RBI came up with the guidelines on P2P lending, where all the transactions now will be dedicated through the escrow account. And for some lenders, there was RBI found some violations also, and to have a more transparency, RBI came up with a dedicated new guidelines for the P2P lending. And in last few years, that P2P lending was picking up at a very fast pace. So to have a check on the P2P lending, RBI came up with a new guidelines. So that guidelines has impacted, because previously for a lender used to sell their loan to another lender, which was allowed, but after the new guideline, which won't be allowed. And for the early withdrawal, the exit option will not be easy for P2P lenders, and that is the reason that some P2P lenders has stopped the withdrawal options for the investors. So in P2P lending, people used to give their money at the 9%, 10%, and then they used to give the loan to the borrower at the 18%, 20%. Those spread used to be very big, and that due to the high spread, due to some defaults also, P2P lender used to make some money. But now under the new guidelines, for each and every money which is coming back also, it will come through a dedicated escrow accounts only, which will be difficult for the P2P lender to manage. So as per our sources, P2P lenders are in discussion with RBI also, and they are seeking more clarity on the new guidelines.
This is something which will need a bit more of to and fro, because clearly this is a bit of an existential crisis per se for P2P sector. Though of course RBI had its reason to do so because of the evergreening etc. that was being speculated within the sector. But Mayuresh Joshi also joins us on the show. Mayuresh, not just about P2P, but off late, RBI has been very vocal about the kind of concerns they have on retail lending, whether it's the draft LCR norms, or the fact that they're tracking the CD ratio very closely, the tightening of the liquidity for NBFCs. There have been quite a few cases where RBI has actually tightened the norms. What does it tell you? Do you see a lot of slowdown now in consumption, urban consumption, as a ripple effect of all of this?
Afternoon, Anisha. I think, yes, I think RBI has been extremely cautious in terms of liquidity management. And they even flagged off in terms of that concern in terms of how the deposit growth will shape up in the next few months and the next few quarters. Obviously, what you probably see in terms of deposits as a percentage of mutual fund holdings, that has substantially gone up. I was reading some data points where it has actually gone up from 21% a year back, a year and a half back, to almost 30% at this juncture. So 2-3 aspects. One, I think in terms of managing liquidity and ensuring that there is enough in the system as we speak. What actions do the banks take? We've already seen a few public sector banks increase their lending rates by a few bips, which is a prima facie indicator that there might be some element of increase that might happen proportionately in terms of deposit rates as well, garner interest back in terms of deposit mobilization. In terms of banks accessing CPs and CDs as an alternate source, that becomes an option which is viable for the financial system at this juncture. But again, I think as rates start moving downwards with rate cuts expected, how does this overall system evolve is something to see. And ultimately, I think if we increase deposit rates proportionately, does that have an impact on NIMs and spread? So I think there is a lot more that RBI has on its hands at this current juncture when it comes to liquidity management. How do banks tackle all this, including NBFC lending, because all that becomes part and parcel of the system itself seems to be seen in the next few months and the next couple of quarters. So yeah, liquidity and deposit mobilization does seem to be some sort of a pain area for the financial ecosystem at this time.
Yuresh, why are markets holding on so exceptionally strong? Everybody is worried about valuations, yet the market refuses to come down.
Afternoon, Nikuj. I think liquidity has been one of the forefronts of the market at this juncture. So if you talk about the gross number when it comes to mutual funds, when we talk about the net number, when we talk about SIPs, it is still a higher number that we are probably speaking about. Also, let's not forget PMSs, AIFs, the kind of cash that a lot of these institutions are probably sitting at this juncture, and more money coming in every passing month. To counter that as well, the FI holding in terms of not just the index stocks, but the broader market as well, is close to its all-time low levels as we speak. So at some point of time, as the rate cut cycle gets initiated, and as India gets its fair share of flows back in the next few months, liquidity is something which is holding up the markets. Markets are not cheap. Markets are not very expensive. Large sections of the markets are where valuations have become just not tenable at this juncture. But still, liquidity is where I think is keeping the markets afloat at this point of time. And expectations of more FI expected to come in after rate cuts are
view as far as the market is concerned, but time now to bring on board Prakash. He's joining us to talk to us about some exclusive story that he's picked up. Prakash, you've been tracking that meeting that the finance minister had with the PSU banks earlier today. Any insights as to what was discussed, who actually attended the meeting, what are the key takeaways?
Yes, this meeting has now concluded, and we are given to understand that the various issues were there, which has been discussed by the finance minister. A comprehensive performance review has been done by the finance minister, and that is primarily based on 6 key parameters. However, the government has not come out with the statement. We are expecting that formally the government will come out formally issue some statement after some time. But we are given to understand that the focus was on deposit growth and a credit to deposit ratio. These are the important issues which have been discussed in the meeting, and the clear instructions have been given to the public sector banks to come out with a different set of a strategy to increase deposit growth. Along with that, banks have been told they should not forget the fact that the customers have multiple investment options at this point of time. Therefore, a different approach is needed. Along with that, some issues related with the asset quality of the public sector banks, also improvement and resolution process under NARCL are something which was also part of the discussion. Government's flagship schemes such as PM Awas Yojana, PM Surya Ghar Yojana, PM Vishwakarma Yojana has also been reviewed by the finance minister in terms of credit growth. Along with that, some credit growth when it comes to sunrise sectors have also been reviewed by the finance minister, and clear instructions have been given to the public sector banks to take all possible steps to increase credit growth and come out with a different set of a strategy to mobilize deposit growth going forward. So these are the important issues which have been discussed, and we are expecting, because a second meeting, which is with the RRBs, has begun, and we are expecting that the finance ministry will come out with a formal statement after this meeting. Back to you.
Point. A lot needs to be done in order to increase the liability side. Now let me explain it to our viewers. What is liability? Liability for a bank is the deposit which you give. 25% of the savings of India essentially were moving in form of fixed deposits. Now that number has been taken over by SIP. Indians are saving less. Real estate is in a boom, and banks are feeling the heat. And that in a sense has really been one of the problem areas why banks today are now in a sense making a case that for interest rates to come down, they need cost of capital to come down. Cost of capital will only come down if there is access of money coming back into banks, unlike a lot of savings which are now moving into SIPs and into equity market directly and indirectly. So that is something which in a sense is the big talking point, and that is where I think some important decision making needs to be done. Mayuresh, what's your view on some of the PSU banks? I mean, if I do a relative comparison, their CASA franchise is much stronger than what some of the private banks have. PSU banks have done rather well for themselves. Do you think that outperformance is real and it's here to stay?
Collectively, yes, Nikunj. And our take is that the CASA outperformance stems from the fact in terms of a lot of the legacy accounts that PSU banks hold. And therefore, they are in a slightly better position compared to the private counterparts. The second element, obviously, is the expectation in terms of how the balance sheet dynamics are expected to shape up. And therefore, credit deposit ratios will remain steady Obviously, I think on a year-on-year basis, credit growth has been almost around 13 odd percent, while deposit growth has been 10 odd percent, which obviously flags off the kind of concerns on deposit mobilization. But at some point of time, normalization will start taking place. The asset quality resolution that has happened on most PSU bank balance sheets is there and is there probably to continue happening at a steady pace going forward as well. Their PCR ratios are at all-time high, and capital adequacy also remains extremely strong. So selectively within this space, if you leave aside SBI, within the large names, Bank of Maharashtra, as an example, has consistently been delivering good numbers on most of these parameters as we speak. And therefore, I think Bank of Maharashtra within the PSU bank, something like a Bank of Baroda as well, continue to be attractive both in terms of expected earnings growth as well as inflation.
Okay, just stay with us, Mayuresh. Lots more to discuss, but let me quickly take it across to Ansh as well, get a sense of what really is happening in the markets right now and which are some of the volume buzzers in trade.
So Hindalco will be the first stock in focus as the stock has given a good breakout from its 9-session consolidation pattern from around that 635 level. In addition to this, the stock has also surpassed above its 100 DMA level and it has been advancing for third consecutive session. Apart from this, Glenmark will also be in focus as the stock has actually touched record high level with volume of over 2 times its average trading volume of last 20 session, indicating good participation in today's move. Also, the stock trades above its key DMA levels as well. Birlasoft is also in focus as the stock has given a breakout from its 9-session consolidation pattern from that around a psychological mark of 600 with a volume of over 2 times its average trading volume of last 20 sessions. BPCL will also be in focus as the stock was actually trading within a downward sloping channel, and today it has given a good breakout from that channel, indicating a potential reversal in trend on upside. Apart from this breakout stocks, there are high chances of Birlasoft, Balrampur Chini and Hindustan Copper getting into ban list for tomorrow. So keep an eye on the stocks.
So those are some of the price volume buzzers. But talking about price volume buzzers, Captain Point up 19% and Godfrey Phillips up 19% higher on that one. So clearly firing away as far as that stock is concerned. IIFL Finance has managed to perk up quite smartly in the last few minutes. Triveni Engineering is doing quite well. Quite a few buzzers in the trading session. Mayuresh, have you looked at a couple of these names, Kaplan Point as well as Godfrey Phillips?
So we don't cover Godfrey Phillips, but Kaplan Points in particular, Anisha, the expectation largely is that the earnings for most companies within this space have been reasonably better. Now, the expectation largely again is with the kind of pipeline that these companies possess, the expected timelines for these launches over the next few quarters, with pricing being on their side, will mean better operating leverage and better margins as we head into the next few quarters. Also, I think in terms of expectations of steady state earnings growth over the next couple of years, assuming a reasonable amount of blockbuster launches that they have with the limited time period and the opportunity that these companies might get, they probably seem to be in a good space at this juncture. And therefore, I think earnings should continue to be on a very strong footing. Something like an FDC is something which we are liking at this point of time also on any kind of a decline. Our expectation is outside the large names, a few of these mid-cap names where earnings growth can continue to be pretty steady. FDC probably seems to be one case in point at market looking where our is steady. So yeah, space looks very, very interesting.
In fact, I just want to talk about some of those buzzing metal stocks as well, because they are the ones which are really sort of holding up today, be it a Hindalco or for that matter, what you're seeing on Tata Steel as well as the stock price. Having said that, we were chatting with Go India advisors Rakesh Arora. He believes that the trend will stabilize and metal prices will remain range bound for some time to come. But he actually sees no major positive triggers for the sector as of now.
They would remain range bound around these levels. I don't really see too many triggers which can push commodity prices much higher until unless China comes out with a very big stimulus. The small stimuluses they are doing to support the economy is not really working. And also the geopolitical situation is such that countries are putting in trade barriers against imports from China, and that doesn't really augur well because these countries themselves can't really produce or grow that fast. So demand for commodities is likely to remain muted for the next year or so from what it looks like now. And so I would think at the best case scenario is, a little bit of consolidation of commodity prices at the current levels.
Okay, so that's the latest coming in as far as cement sector is concerned. But separately, what are the big trading ideas that our charters have at this point of time? Let's take the BDSC trades. Rudramurthy, you go first. What's the buy today, sell tomorrow idea, if any?
See, for me, metals are doing great and this can continue even for tomorrow. Vedanta is a buy for me, looking at target of 450 with a stop loss of 427. And for me, ONGC also looks very, very strong. One can look at buying ONGC for a target of 345 with a stop loss of 330.
Okay, so those are the top recommendations, ONGC as well as Vedanta. Nuresh, what about you?
So first would be a buy on HCL Tech. The stock has given a recent swing high breakout. Good momentum here. Stop loss at 1670, target price of 1720. Second is a buy on Shriram Finance, a new 52-week high here. Strong momentum as well. Stop loss at 3040, target price of 2150.
Okay, so those are the top BTSC trades right now, but just taking stock of what else is happening in the market. So Godfrey and Kaplan Point we have been talking about and they're on fire. IFL Finance 2, First Source, Polymed, eClerx, Angel One. These are all the stocks which are buzzing away. New India Assurance is the other one which is actually holding quite smartly. V-Guard is down in the trading session. Kalyan Jewelers is coming under pressure. We did speak with the Senco management earlier in the day. They were quite hopeful of a double-digit kind of growth in the second quarter itself, with margins also holding up. So let's see what really pans out. But in terms of the other internals of the markets, it is the entire auto sector which is in focus, right, because of the downgrades as well. Mayuresh, specifically wanted your view on Ola Electric if you have been tracking that one. And for rest of the sector, what kind of churn would you make?
So Ola Electric has a fantastic debut, and the results were quite decent. Their commentaries in terms of the new launch that they're expecting at the price point at which they're expecting it as well, 75,000, getting into the 5G battery ecosystem. I think that is keeping a lot of the investors for traders enthused in the stock. But for the sector as a whole, Anisha, again, I think last 2 years have been exceptional. Whatever they'll report this year will come off in terms of the higher base of the last couple of years. We're obviously seeing some amount of waning in demand coming through, unsold inventory starting to build up at the dealer end as well. Therefore, I think how this actually shapes up in terms of new launches, whether it's four-wheelers or whether it's two-wheelers, is going to be very, very interesting. From a price action perspective, obviously, I think they're trading at the higher end of their spectrums, as well as valuations in terms of their standard deviations over the past 3 to 5 years as well. So this year is going to be a steady state year for most auto companies. And therefore, I think four-wheelers, two-wheelers, if somebody holds, can hold on, but we do not expect any exceptional returns from this space. The auto ancillaries selectively far more attractive at this juncture because the kind of mix that they probably have in terms of both the internal combustion engines and the electrical platforms that they're probably catering to along with the replacement market might actually shape up a tad bit better than the original equipment manufacturer. So I'm being a little bit more positive and biased and selective on the auto ag space. Autos might just be market performance this financial.
Other than the sectors which we've already discussed, wanted to understand what are your top holds? I'm guessing there's not a buy list right now in this market and top avoids.
Afternoon, Aisha. I think consumer discretionary is something that we'll still continue to like selectively. So this is vectors, as an example, is something where our belief is numbers have been pretty decent. They are on an expansion track. So they are expanding their capacities with MP. They're expanding their capacities in Maharashtra. So they're getting out of the northern regions, trying to expand their foothold in the western areas as well, which should augur well in terms of volume. They are suppliers to most USR players in the country. And at this juncture, both the expectations in terms of the premium biscuit market as well as the bakery product segment as well. There is significant amount of growth that the organized players can have, which will relate to better EPS rating and rankings as we see in India and better bottom line. So this is one sector where our focus probably lies. The other one is probably in terms of how sugar as a space can evolve. And therefore, I think Taj Industries is a absolute proxy in terms of how this segment is expected to evolve. You already know about 2G, 3G ethanol plants that they manufacture, but diesel, airline turbine fuel, expectation in terms of marine, what they're probably doing in their engineering segment when it comes to water treatment solutions, the high purity segment. They're in very late stages at technological advancements for implementing this as well. So I think this is a very interesting space which Praj is probably expected to be being selected, but broader markets, a few of these ideas.
Okay, so Praj Industries, Mrs. Vectors, these are some of the names that you can watch out for and which still look very interesting from the market point of view. Separately, in terms of the market action right now, well, it's pretty much, very somber at the moment. Reliance Industries, of course, is doing quite well, 0.8% higher. TCS, Hindalco, NTPC is in focus. On the back foot, M&M is coming under pressure. We have been talking about how the auto sales and the inventory situation is panning out. ICICI Bank, Axis Bank are the other ones. But overall, looks like it's a bit of a somber closing for the markets. We're just around the 24,600 mark, in between the range that we have been looking at throughout the day. But for the wrap of the day, let me take it across and toss to Snehi, who's been standing by. Hi, Snehi.
Hi, well, yes, let's take a look at how this day has panned out to be today. And on the Nifty front, rather range bound, like you mentioned, we've ended below the 24,600 mark. We did dabble into the red for some time during the day, but we've managed to jump onto the green, but not much happening. But well, yes, nonetheless in the green. Let's take a look at what the other indices have done. Sensex also rather flat, but above 80,400. Advanced decline ratio in the favor of the advances today. And when you take a look at the broader markets, Nifty mid-cap was in tandem with the Nifty rather flat coming in, but Nifty small cap was an outperformer today, almost 1.2, 1.3% higher, or 1.8% higher now is where Nifty small cap is ending. Let's quickly take a look at some of the Nifty gainers and losers. On the Nifty front, you had Hindalco, BPCL, Shriram Finance, Tata Steel, LTI, Mindtree, all of these are your Nifty gainers. On the flip side, some stocks like M&M, Bajaj Auto, Axis Bank, Indices Bank, SBI Life and Tata Consumer, they weighed on the index today. Now, in terms of the sectoral moves, Nifty Metal was your biggest winner in a trade today, almost 2% uptick coming in on that front. That was followed by Nifty Energy. PSU banks also made a comeback today, a rather smart recovery on that front as well. Media, Pharma, IT, all of them have ended in the green. However, on the flip side, you have Nifty Auto that has been your top laggard in today's trading session, followed by Nifty Bank. So both of these sectors have ended in the green. When you take a look at what worked out for Nifty Metal today, Nalco, Hindalco, Vedanta, all of these stocks did pretty well. But let's also shift focus, talk about some other big buzzers. Caplin Point has ended the day quite high. Genus Power, upper circuit. DCX Systems also an upper circuit today. Glenmark Pharma also ended the day with gains of more than 4%. Very positive news flows coming in for all of these stocks today. On the brokerage front, Voltas, Entero Health, Shriram Finance, Aurobindo Pharma, all of these stocks did pretty well. But well, yes, that's how we wrap up today's trading day. 24,579, almost 24,580 on the Nifty.